Assalamu alaikum. Have a good day. Welcome to Financial Management eLearning. We are going to discuss management information. We are in domain marginal costing and absorption costing. And we are in Module 9. Today, we will discuss absorption costing. Previous module was marginal costing. Today, we are going to finish the marginal costing and absorption costing and calculation profit under direct absorption or marginal costing and reconcile the results under the difference method. Absorption costing, it is costing system which treated all manufacturing cost, including both the fixed and variable cost or product cost. So absorption costing, if we see here, direct material, direct labor, variable overhead, fixed overhead, all go to the product cost. So absorption costing is also called the full costing. Under absorption costing, companies treated all manufacturing costs, including both fixed and variable manufacturing cost, are as a product cost. So total variable cost change proportionately with changes in total activities, while fixed costs do not change in the activity level change. These variable manufacturing costs are usually made up of direct materials, variable manufacturing overhead, and direct labor. The product cost or cost of goods sold would include direct materials, direct labor, and overhead. The period cost would include selling, general, and administrative costs. If you see here, look here, if you see the absorption costing, it means direct material, direct labor, variable manufacturing overhead, and fixed manufacturing overhead, all product cost. On the other hand, if you see the variable costing, the right side, and product cost only is the direct material, direct labor, and variable manufacturing overhead. And here fixed manufacturing overhead goes to period cost under the variable costing. But absorption costing, here only period cost is variable selling and administrative expenses and fixed selling and administrative expenses. So difference only in the fixed manufacturing overhead. So fixed manufacturing overhead include under the absorption costing in product cost, but under the variable costing it's used in period cost. Only difference is here. So absorption costing component, we know the direct materials, direct labors, variable manufacturing overhead, fixed manufacturing overhead, etc. or the absorption costing component, we know it. So absorption costing is what to do this step. First step, assign cost to cost pool. So first step is assign cost to cost pool and then calculate the determine the amount of use of whether activity measures in use to assign overhead costs such as machine hour or direct labor hour use, and assign cost is the third step. So divide the use measure into the total cost in the cost pool to arrive at the allocation rate per unit of activity, and assign to overhead cost to produce goods based on this uses rate. So overhead absorption, so look here, absorption costing is required for external financial reportings and for the tax purpose. So absorption overhead, manufacturing overhead that has been applied to produce or other cost objective. Overhead is usually applied based on the predetermined overhead allocation rate. So overhead is over-absorbed when the amount allocated to the product or other cost object is higher than the actual amount of overhead, while the amount is under-absorbed when the amount allocated is lower than the actual amount of the overhead. So we have to understand the absorption costing is required for external financial reportings and for the tax reporting, and absorption costing is only differ here is absorption costing is variable costing only fixed manufacturing overhead. So fixed manufacturing overhead included under the absorption costing in the product cost. On the other hand, in the fixed manufacturing overhead included in the period cost under the variable costing. So it is the basic difference between absorption costing and variable costing or marginal costing. So if we see here absorption costing approach, so look here, direct material, direct labor, variable factory overhead goes to the charge to cost of goods produced and charged as expenses when goods are sold. And a fixed factory overhead are all selling at an overhead is a charged expenses when incurred. This is the absorption costing approach. So some argument to support the absorption costing, that means fixed overhead are essential for production. That's why absorption costing need, and consistent with external reporting. That's why required for the absorption costing. It is the positive argument or support for the absorption costing. So now if we see here, we solve few problems, then it would be easier to ask the absorption costing, marginal costing, and the reconciliation between the profit under the absorption costing and marginal costing. So what is here? If we are limited manufacturing a single product M3, the following figures for a 1 year period, this will two levels is here, 50% level and 100% level. So sale and production for 100 unit under the 50% capacity or activity level, and 800 units for activity level for 100%. So sale 8 lakh, 16 lakh, production cost, variable and fixed is separated all, selling and distribution, variable, fixed all. The normal level of activity for the year 800 units. Fixed costs are incurred evenly throughout the year, and actual fixed costs are the same as budgeted. So there are no stock of that product at the beginning of the year. So in the first quarter, 220 units were produced and 160 were sold. So from this figure, we have to calculate fixed production cost absorbed by M3 if absorption costing is used. Budgeted fixed production cost 1,60,000. This $1,60,000, the all at level, that is all capacity, $1,60,000. So a budgeted outputs normal 800 units as per the question, and therefore the absorption rate $1,60,000 divided by 800 units, then we'll get $200 per unit. So during the first quarter, the fixed production cost absorbed of that product M3 220 units. As per the question, look here, 220 units were produced. So, and $200 per unit. So, fixed production cost absorbed in the month $44,000. Now, what would be the under or over recovery of the overhead during the period? Actual fixed production overhead, that means 1/4, that 1,60,000. 1/4 of 1,60,000, we will get $40,000. But absorbed, that we calculate here 44,000. So if we minus the 44,000, then we'll get over recovery of overhead 4,000. So over recovery 4,000. Now number 3, profit using absorption costing. So look here, profit for the quarter, absorption costing, sell unit 160 units, because we are saying that sold 160 units, and 160 unit at the rate of 2,000 per dollar. How 2,000? Because sell a product like dollar divided by 400 units, or $60 lakh divided by 800 units, it's come to sell revenue 3,20,000, $1,000. Less production cost, variable cost, 220 units multiplied by 800, we'll get 1,76,000. And fixed overhead absorbed, 220 units multiplied by 200, then we'll get 44,000. So 220, add opening stock 0 because there were no opening stock. Closing stock 2,20,000 divided by 220 unit multiplied by 60 units because 60 units is here. So production 220, but 160 units is sold. So different units are 60 units. So closing stock 60,000. 3,20,000 minus 2,60,000. So closing stock 60,000. So cost of goods sold 1,60,000. Less adjustment of over absorption 4,000 we calculated here. So selling and distribution overhead, variable 160 units, $400 per unit, so 64,000. Fixed 1/4 of 2,40,000, 60,000. So we'll get 1,24,000, and if we do that, we will get cost of goods sold 2,80,000. So profit is 40,000. Now profit for the marginal costing. So selling revenue is the same, and production cost variable is 220 units, $800 because and less production cost, variable cost 800 units, opening stock and closing stock 48,000 because 1,76,000 is the production cost divided by 220 multiplied by 60 units, we'll get 48,000. So a variable cost of goods sold 1,28,000. And if we add selling and distribution overhead, variable 160 units multiplied by 400, then we will get 64,000. So cost of sale is 1,92,000 and contribution 1,28,000. How we'll get it? So here A, that means 3,20,000, and B means cost of sale 1,92,000. Then we will get 1,28,000. So if we less from there the fixed cost, production and selling, distribution, then we will get 82,000. So here look here, there's the difference between absorption costing and marginal costing. Profit here, absorption costing profit 40, on the other hand marginal costing profit is 20. So what is the difference? Why this difference is? Cause of difference in net operating income under variable and absorption costing. So why variable costing and absorption costing produce different net operating income? It is the question. So how to reconcile net operating income figure produced by these two costing approach? So the variable costing and absorption costing usually produce different net operating income figures. The reason is that the fixed manufacturing overhead cost is not treated as the same way under two costing methods. Fixed manufacturing overhead cost treated as the product cost of absorption costing, but under the variable costing, not consider the fixed manufacturing overhead as a component of variable costing of product cost, but it is thing that is a period cost. Is also the period cost, only two things for the absorption costing, but three items for the variable costing. So that is the basic differences here. If I variable costing income statement, the use of internal management absorption costing income statement for the use of external parties. The thinking part, they are preparing two types of costing. One is variable costing and is absorption costing. So company manufacturers produce the sold for $80, the variable cost, fixed cost data is direct material 30 and direct labor 19. And factory overhead, variable and fixed calculating here. So marketing and general administration also variable and fixed figure is here. So during the month of June, 9,000 units were produced and 7,500 units were sold. The opening inventory was 2,000 units. Prepare to income statement, the one using variable costing method and one using the absorption costing method. And the difference of net operating income under two approaches, we have to explain it. So under the absorption costing, look here, sales 7,500 units and selling price per unit is $80. So with the $80, multiply the 7,500 units, we'll get $6 lakh for the sale. And cost of goods sold, beginning inventory 2,000 units, and at the 60, and production cost 9,000 units is the 60. So what is the production cost? Look here. How come 60? Absorption costing 30, 19, 6, 5. So production cost, direct material 30, direct labor 19, variable cost 6, and fixed cost 5. All goes to the product cost under the absorption costing is 60. So here we'll get 5,40,000 and cost of goods available for sale 6,60,000 if we add it, and the ending inventory 3,500. Calculate the ending inventory. Beginning inventory 2,000. Units produced during the period 9,000 and units sold 7,500. The ending inventory is 3,500. This 3,500 multiplied by 60 will get 2,10,000. And if we minus 2,10,000 from the 6,60,000, then we will get 4,50,000. And from the 6 lakh of sale amount, if we less the cost of goods sold 4,50,000, then we will get gross profit 1,50,000. And now if we minus the marketing and administrative expenses, variable 7,500 units multiplied by 4, this 4 counts from here, this 4 marketing, this 4. Okay, so 30,000 and fixed 28,000, because here total 28,000. So 28,000, and we get the marketing administrative expense 58,000. And from the gross profit, if we minus the marketing and administrative expense 58,000, then we'll get net operating income 92,000. So it's for the absorption costing. Now, for the variable costing, what is the variable costing? Look here, the variable costing selling amount is the same. The variable cost of goods sold, beginning inventory 55. Because why 55? Because this fixed cost of factory overhead $5, not in the product cost under the marginal costing or variable costing. So less from this 60 less 5, then we'll get 55. So $55 per unit under the variable costing. So 2,000 unit 55, 1,10,000, and a production cost 9,000 unit multiply by 55, we will get 4,95,000. And from there, the ending inventory 55, 3,500 units, 1,92,500. Then we'll, if we minus for the cost of goods available for sale, then we will get 4,12,500. And from the sale, if we minus it, then we'll get gross contribution margin 1,87,500. And from the contribution margin, if we minus variable marketing and administrative expenses 30,000, look here, it is the 30,000 multiplied by 7,500 units, we'll get the 30,000. Contribution margin is 1,57,500. And if we less the fixed cost, manufacturing overhead 45,000 and marketing and administrative 20,000, then we will get 73,000. From contribution margin 1,57,500. If we minus the fixed cost of marketing and administrative expenses, then we will get net operating income. So look here, under the variable costing, net operating income 84,500, but under the absorption costing is 92,000. So here's some difference. Why this difference? So we have to reconcile it. How? Net operating income under variable costing 84,500. So fixed manufacturing overhead cost differ in inventory. 1,500 inventory multiplied by 5, then we will get 7,500. So if we add this 7,500, then with the 84,500, then get net operating income under absorption costing 92,000. So it is the reconciliation. Okay. So explanation of the difference of the net operating income. Ending inventory absorbed a proportion of fixed manufacturing overhead and reduce the burden of the current period. So this is the way proportion of fixed cost of. So under variable costing, the fixed manufacturing overhead cost is not included in the product cost. Variable costing, fixed manufacturing overhead cost is not included in the product cost. It is included in the period cost. But a change in the income statement of the relevant period of the entirety. Therefore, no proportion of fixed cost is absorbed by the inventory under the variable costing. That's why there is difference between that's why the figure is not the same under the variable costing and absorption costing. So important point we have to understand, the net operating income under absorption costing system is always higher than the variable costing system when inventory increase. Okay, so operating income under variable costing system is always higher than absorption costing system when the inventory decrease. When inventory increase, the fixed manufacturing overhead cost is deferred to inventory. And when inventory decrease, the fixed manufacturing overhead cost is released from inventory. Okay. So here we have a lot of problems is here, and also taking here all solution. If you download this sheet from my Google Drive, and if we do some exercise with these problems, then it would be clear, overall clear. It would be easy to you understand, easy to use. All problem you would be able to solve it through if you make it exercise and do it regular basis. And so another problem. If oil limited is a present working at 90% of its capacity, produce 13,500 units per annum. That operates flexible budgeting control system where labor and material cost per unit are constrained under present condition, and profit margin is 10%. Okay, and the following figure with the budget: activity 90% and 100% units under the 90%, 13,500 variable expense, semi-variable expense, fixed expense also is here, and determine the differential cost of produce 1,500 units. What price should be recommended for exporting this 1,500 units, considering the fact that overseas price are much lower production cost also. So calculate the labor and material cost, sell 90% capacity, 13,500. So sell value at 90% capacity 15 lakh, profit 10%, 1,50,000. So cost of goods sold 13 lakh, 50,000. And variable expense, semi-variable expense, fixed expense, if we minus it, then we'll get labor and material cost 8,10,000. So therefore material and labor cost 100% capacity 8,10,000 divided by 90%, that is 9 lakh. Okay. Now activity level, unit 90 and 100. So if we put all figures here, then we'll get total cost 13,50,000 under the 90% capacity, 13,500 units, and under the 100% capacity 15,000. The total cost is 14,50,000. So a differentiate under the 10%, 1,500 units difference is 1 lakh taka. The export price would be quoted not lower than the 66.67, because 1 lakh divided by 1,500, then we'll get 66.66, assuming the export price will be no effect on the domestic market. So it is the decision making question, and this type of question is here we included a few questions. And so that net operating income in higher under the absorption costing than a variable costing, because closing inventory is higher than the opening inventory. Okay, problem 13, absorption costing and marginal costing. So here, look here, absorption costing here included the product cost is material cost, direct labor, variable overhead, fixed overhead, and it comes to the unit cost. On the other end, marginal costing included the direct material, direct labor, variable overhead is not added in the fixed overhead, because fixed overhead for using in the as the product cost of absorption costing, not for the marginal costing or variable costing. So look here, per unit cost is differ under the both costing system. Under the absorption costing system, per unit cost is 100, but marginal costing is 82. So it is the basic difference between absorption costing and marginal costing. So today we discuss absorption costing. And absorption costing is a system which treated all manufacturing cost, including both the fixed and variable cost, as a product cost. And this basic difference between absorption costing and variable costing, only fixed manufacturing overhead is included in the under the absorption costing is the product cost, but under the variable cost is included in the period cost. So that's why is the both profit under the variable costing and marginal costing is differ, because this included in the closing inventory. In case of absorption costing, it's the included the fixed manufacturing overhead proportion under the within the closing inventory, but not including the variable costing closing inventory. So that's why is the difference. So it's all for today. Inshallah, we'll meet with you again with my next module. Till then, take care. Allah Hafiz.